The world is moving towards electric vehicles, and it's not a question of if, but when. There could be 230 million EVs globally by 2030, making up as much as 20% of all cars at that point. You can back the EV makers, but why not consider the company that provides the lithium for the batteries? That's a strategy that's popped up in data from Trackstar, our proprietary sentiment indicator, which saw that financial pros were doing just that, looking further back in the EV supply chain. Albemarle Corp, which we rate at 9 out of 10, is the world's largest provider of lithium for EV batteries, and if you believe in the EV revolution, you should consider this stock. Albemarle Corp is a specialty chemicals manufacturing company which is making significant strides globally. The company's business has 3 divisions. Albemarle expects 20 to 30% of CAGR in its lithium division through 2030. That's growth in the firm's most profitable division with the biggest margins. Revenues exploded for the firm in 2022 as its lithium division burst onto the scene. Operating and profit margins improved too, and the company now runs a free cash flow margin of 11.14%. Most of this was driven by the explosion in lithium carbonate prices, which rose 6-fold between 2021 and 2022 from where they cooled off. And that's been reflected in the company's sales forecasts. Albemarle has around $1.8 billion in net debt, but should generate $2 billion from cash flow this year alone. We compared the company to other basic materials companies, and it's the cheapest on all 3 PE ratios, mid-range on price to book, and amongst the dearest on price to cash flow. Albemarle is a great stock to own if you want to play the EV macro themes. It has some risk from operations in China, but its global footprint should mitigate that. Albemarle is one to buy on dips in its share price or that of lithium, and hold it for 5 to 10 years.